Well, we'd seen the equity market, the Argentine equities had fallen dramatically, like about 80 odd percent.
Purely at the commodity side of things, Argentina stands here, and it's an incredible country in terms of what it could do.
We were one of the only voices saying we're going to be staying in, and a lot of people panicked.
The largest easily in terms of market cap of all of them has been Brazil, and so Brazil was going through a whole lot of trouble and turmoil, and it still is. Argentina, it's been a topic that has been brought up in many Q&As, partly, I guess, because the returns have been fairly significant to date, and we keep getting the question of, is the fun right over? And we absolutely don't think that is so. So we thought we'd put together some of the reasons why we think that is true. So let's move into what we've been looking at in general, and what our current views on Argentina are. So what was it, October?
We have a couple of videos on Argentina already. If you're an insider member, you may have seen them. If you're new, we recommend going and have a look at them. One was from just before the elections in 2023, in the run-up to it, when people there was a bit of consternation about what would happen with the elections and the result of the elections and whether that would affect our positions. We were one of the only voices saying that we're going to be staying in, and a lot of people panicked. I don't know if you remember that, but a lot of people got out of whoever was in Argentina, which weren't many people. Who was in there sort of got shaken out. Yeah. And then you had a discussion, I think, Chris, with a subscriber of ours who's...
Yeah, Miguel, I spoke with him. We had already invested prior to that, and then I caught up. So this was after the elections when Milei was elected. Then I caught up with Miguel and just got a little bit more of some of the color, I guess, on what the zeitgeist in the country was and so on and so forth. So folks can go and have a look at that. But there's a lot that's happened, that's transpired subsequent to that, and a lot more information that we have that gives us a lot more, I guess, clarity and confidence for our existing positions, and even some that we might add to the pot.
Yes, we invested. The trade alert for Argentina went out to subscribers, and we started investing for clients in Glenorchy in October 2021. And Brad, do you want to talk a bit about what's gone on since then, up until now, with regards to the sorts of companies we've invested in and what the returns have been like?
Yeah. Well, yeah. So I think it was about 5 companies we invested in. It was a bank, or a couple of banks, a couple of energy companies, an agricultural company, and I think also an electricity producer as well, to give us a sort of broad exposure to the Argentinian equity market. Back then, we were buying, this is even back then, they're on P's of like 4, 5, and 6. Everyone is saying, oh, look, it's a basket case. It's like, well, okay, yeah, fine. But these companies are still producing cash, and the valuations are crazily low. Like, no one believed it. So we thought, okay, this is just a no-brainer. And look, we had no idea. We suspected there was change coming. It just couldn't continue the way it was. So you get this sort of inclining. And of course, Milei came along. But when we first invested, Milei was, I think if you went looking for him, you'd find him. But it was pretty hard to find. He had no real following as such. And then he went from rags to riches type thing in terms of politics. The market's gone up dramatically since then, but the valuations are still very, very cheap, which we'll get into later on. But yeah, it was a difficult. Well, we'd seen the equity market, the Argentine equities had fallen dramatically, like about 80 odd percent from about 2000 and when was it? 2014 thereabouts, and they'd gone sideways for a couple of years. And it was one of those markets or those setups where it sort of ticked the boxes. Unloved, unwanted, people wouldn't touch it with a 40-foot barge pole. And on this rare instance, they were fundamentally here and now very, very cheap. We weren't buying them in anticipation of what earnings would be. We were buying them in terms of what the earnings were here and now.
Chris, do you want to talk about, remind people of the macro behind this? Because some people won't even know, we're invested in Argentina. If you're watching this, you're not an insider member, for example. You probably don't even know that we're invested in Argentina. So maybe remind people, bring people up to speed with why we're interested in the first place.
Well, if you look at what we've been focused on from a sort of macro perspective, it is largely the collapse of the debt markets is one of the components that we see as being a big risk. And the other is that you have fairly highly elevated equity markets. And when I say that, I'm talking about things like the Mag 7. It's largely Western markets where the weightings within world indices are extraordinarily high, the valuations are extraordinarily high. And a lot of that is all back of a credit-based system, which is basically imploding as we speak. There are a whole lot of factors that have driven us towards commodities in general. That's one of them, because as you go through debt cycles and debt collapses, you typically have commodity markets outperforming. We have the commodity markets at cyclical lows. Also at the same time when we have, as we've mentioned so many bloody times here, we have all these crazy policies which have extended as what is part of that cyclical bear market. When you look at commodity markets, we look across the globe, we look at all sorts of countries and the valuations in those countries and the various equities and so on and so forth. So if we look purely at the commodity side of things, Argentina stands here, and it's an incredible country in terms of what it could do if you got the Peronists out of the way. Immense agricultural prowess, mining opportunities. It's got a deal that we'll talk about in a minute, the Vaca Muerta deal, or Vaca Muerta oil and gas deposit, which is the second largest shale gas deposit in the world, the fourth largest shale oil deposit in the world, got the third largest lithium deposits in the world, and the list goes on and on. And so you naturally can be drawn towards those particular sectors within the country. And then what you find is they are extraordinarily cheap when you if you compared, say, as we did, a company like YPF compared to, say, a Western company that might be extracting shale oil out of the Permian, right? So you have a valuation differential. So these are some of the macro factors behind Argentina. Of course, there's a number of other things, and back to what Brad was talking about when we first got involved with Argentina. I remember us having a conversation at the time, and one of the things that we were looking at, Brad, was Brazil was going through all sorts of turmoil from a sort of political standpoint. And I remember we were sitting there and I was like, well, when you have capital that needs to be allocated towards a particular geographic area, and there's many funds out there that are basically geographical funds. So for example, you can have an emerging market South American fund, or an emerging market index, or anything of those natures. And so if you're an asset manager that is invested into and has to invest into, say, South American equities, you kind of left with a bunch of countries, right? You've got your South American countries. The largest easily in terms of market cap of all of them has been Brazil. And so Brazil is going through a whole lot of trouble and turmoil, and it still is. And so it made sense that you were going to have a bunch of that capital was going to view Brazil as being more risky. And then the question is, well, where's it going to go? Because you still are mandated to invest in South America. And Chile didn't look that attractive. It sort of went left. And then you had other much, much smaller countries, which couldn't necessarily take capital flows to the same extent. So these are some of the factors where you just start layering many elements behind what you see as building, and then we started seeing things in the chart, which led us to being sufficiently confident to take a fairly small, I think it was 5% at the start, weighting into Argentina. But look, as we stand today, you have what is a country which has a very well-educated workforce. It is probably the most European country in the world now, because Europe is no longer very European, and it has some of the best resources on the planet. It has been stifled for 80 odd years, and that stifling, that red tape, is now being stripped away. As Milei famously, his statement is afuera, which is basically get rid of all of this garbage. So he's been famously taking his chainsaw to a lot of red tape. And so what that's meaning is that we're now seeing a lot of existing businesses within Argentina that are no longer basically exporting their profits to Switzerland or anywhere else. And there's many ways that they've done that. to skirt taxes and so on and so forth. But basically, we've seen this fleeing of capital that's now no longer taking place to the extent that it was, which means profitability that exists in the country is now being retained in the country. It's capital that's now available to be redeployed back into development, into capital investment, and so on and so forth. And this is important because the returns that we've seen so far, while they've been substantial, likely pale into insignificance compared to what could, I'm not saying it will, but what could transpire when we get institutional capital, when we get Wall Street participating, and then subsequently when you get retail. And we were a long way off of that, and there's very little of that really taking place just yet. So it's basically insiders that are existing in the country in terms of corporates who are going, wow, this is really good. And they're bringing capital in and they're investing. And so we're seeing a lot of that. Andrew was down there for 2 weeks, intensively, non-stop meetings with influential companies and contacts of ours down there. And certainly the energy and the positive business environment that everybody is feeling and working towards. Andrew Kahn, he's not a gentleman that's prone to over-exaggeration at all. And he's smiling from ear to ear. So there's a lot of positive things going on there. And we can get into some of that further on.
We're talking about this basket case economy, but Brad, do you want to just tell everyone what this is? Because it's pretty hard to believe a basket case economy can sort of return this well.
So this is the MSCI Argentina index in US dollar terms, and the S&P 500 indexed to 100 as of 5 years ago. So, as of the start of 2020. S&P is up some 70-odd%, and the Argentinian index in US dollar terms is up some 287 to 90%. Now, you may say, oh, I've missed the boat, but we don't think so. Its valuations are still very, very cheap. It's just getting into gear. It's been years and years of being out of favor and love. We think we'll make multiple returns from here on in.
Just to add to that, to put this into context, Apple is about a $3 trillion market cap. Argentinian stock market is about 30 billion. Okay, so it's a tiny fraction. So the movements that we've seen now are still relatively small. If you had a tiny amount of capital leak out of a company like Apple, right, into all of Argentina, it can have a significant impact. And so I don't think people fully realize how decimated the market has been. A 30 billion market. I mean, look, 30 billion, it'll just buy you a few, fancy houses on the North Shore in Sydney, which has got overvalued real estate.
The other thing is, Chris, is that, and we've talked about this before. It's not just the size of the market; it's the available options to invest into that market. And when you have institutional capital who are mandated to take a percentage point of a position in an Argentinian company, you can't even, there'll be an instance where you won't be able to just enter the market as a big institutional investor. You'll have to do it in stages because there's probably not the liquidity, and the market is so tiny. To international investors, there's a finite amount of stocks you can actually buy easily as ADRs on the New York Stock Exchange. And so by that sheer constriction in liquidity and market availability for investors, surely that probably explains some of this chart pattern, because you don't need much money going into these things to make them really move. If they get popular, God knows what will happen. The biggest stock is YPF, which is 9 billion. In fact, at the moment, there's only 5 stocks on the Argentinian stock market that are over $2 billion, and anything below $2 billion is regarded as a small cap in US terms. So they're all small cap stock. Yeah, to your point, these things can go a long way because of liquidity flows.
The other thing that you and I were talking about earlier today, Brad, and I know I mentioned it to you as well, Lucas, is that we're going to start seeing these equities within Argentina being added to various indices. So Reuters just put out a notification that Argentina is going to be upgraded from, I can't remember what this particular status was, but it's going to be entered into the emerging market index by the MSCI. It added to the MSCI emerging market index. And so, that's right. It was classified as a standalone market. rather than part of a emerging market. Anyway, so the status then changes. They add it. They say, okay, this is fine. You guys are all fine. Tick the box. You now can be added to the emerging market index. And so automatically now, when investors go out and say, oh, I want emerging market exposure, I'm going to go and buy this ETF over here. They won't even realize it, but they're going to have a portion of allocation of their capital that's now going to go and buy stocks in Argentina. And to the point that we've just been making, there's not a lot that they can buy. And there's not, again, it's a 30 billion market cap. It's a little bit more now, but it's a very small market cap to buy all of Argentina. So I think that trend is going to continue, and and then of course you get at some point, and I don't know when, you have the inevitable market reaction from fund managers, from even passive capital allocators that will reprogram their algos, and then finally retail, where they go, oh, these guys have been making all this money. I want to make money too. Oh, have you heard about Argentina? Oh, yeah, I've heard about it, and off you go, and things can get really silly. We're a long way off of that. And of course, mostly if that transpires, and I think there's a fair case to be made that it will, we will probably be exiting at that point. But again, we're a long ways off of that. But that's what can transpire in this sector. And to that point, Reuters put out a thing saying that is now going to be taking place, I think in November, quote me on that, but it'll go through a process and then it'll be added to the index.
Put a reality check here too. It all sounds rosy, etc. Take a look at some of those pullbacks in the white line. Now that pullback in 2022, that was some 40%.
This one or this one?
No, in 2022. That's 2023. Come to the left.
Middle of the chart. Yep, there.
That was some 40% pullback. The pullback we've just had, I haven't calculated that one, but that one there, that's what, 400 to 300 thereabouts. That's about, what's that, 100 on 400 is a 25%, 25% pullback. So, these things aren't for the faint-hearted. And one could have bought Argentina stocks in, let's say, 2021. Come 12 months later, thereabouts, you would have been down 40-odd%. It takes a lot of patience and a strong constitution.
But I think the important thing, and we keep repeating this like a broken record, but I think it's so important. Understand the underlying trends and trends in motion, right? They don't change. Like large long-term trends in motion go for multi-years. So you need to decide whether you're going to trade that thing if you're smart enough to, we're not, or whether you're going to be allocate a portion of your portfolio and then ride it and stomach that volatility. So when you get the 40% pullback, you just go, that's what it is. I know it's coming. There it is. Well, that sucks, but I'm cool with it. And be able to actually go through that, because that's how you outperform over time. I think one of the biggest things that really does exist is your superpower is patience. It's just, if things take time. And so if you understand those cycles in motion, all of the things that we've been talking about here, these are not one-offs, right? The political change there is, if it's, and it looks like it's got legs, that will be something that probably gives this place at least a 10-year bull run. But it's not going to be a bull run that doesn't have 30, 40, 50% pullbacks. It's always going to happen. Never, that good old adage, never sell a bull market and never buy a bear market, really rings true.
All right. Let's just quickly cover, well, we've spoken about it really, but this is a chart of the stocks we recommended versus the S&P 500, and this is when we recommended them. So insider, and we're holding these. We're not doing anything with them, are we, guys?
What I'll just point out with that, folks, is if you ever look there, we invested, it ran up, it came all the way back down, and basically we had to wait a whole year, and we had nothing to show for why did we hold? We held because we knew what our fundamentals were. We knew that we could and do have those sorts of periods of stagnation, and we will continue to. I just want to point that out because it's easy for people to look at a chart and go, oh wow, that's great, it went from left to right, upwards.
Likewise, this isn't much fun when people experience this sort of stuff and this sort of stuff.
Part of the you can't not have that. We need that because it shakes out the weak people that don't have the patience. Buffett's famous statement of the market exists to transfer capital from the impatient to the patient is so absolutely true.
It is. We should change it being into Spanish and say something about having cojones instead. You just have to have cojones and hold on. We've spoken about this a bit already, but let's talk about the prospects moving forward for Argentina and some of the bullish cases for getting involved now.
Well, it's only just really starting to attract some attention. Elon Musk talked about it. Stanley Druckenmiller, famous trader, used to manage the Soros funds. He's been talking about it. So these are like, well, these guys are influential, but it's still early days. We haven't really seen any big fund flows into Argentina, or at least funds that we recognize. It's more family offices and what have you. It's still very, very cheap. The table on the left-hand side, that's a valuation of the MSCI Argentina index, sitting on a forward P of 6 times, actual P of 8 times thereabouts. Still at book value. I mean, these are all valuation terms. If we look at the S&P 500, on the other hand, now sort of different markets, I guess, and one is heavily influenced by technology, others influenced more by commodities, but it's sitting on a forward P of like 3 times. 5 times price to book, if that makes any sense. So the point being is these stocks are still very, very cheap. And even though they've gone up dramatically, there's still a lot of upside to come. When people really start, what could happen here is that earnings could remain the same, and then you get a re-rating of the market, more excitement coming in, and the market could easily double here on in, even with earnings not changing, if people's attitudes towards Argentina just change. That's what you call multiple expansions. Yes, and so as we've got here, we're still yet to see any real institutional flow of capital into the country. Chris hinted at the Argentina being included in the emerging market index, which would by default lead to flows of capital into it. How much upside would that create? Who knows? But it'll be definitely positive for the market.
There's something else that people need to understand, which is you've got when you're reducing red tape and constrictions in any existing company. Think about a company, and your tax rate falls. The legislature changes such that it's easier to do business, so your cost basis falls by even 5-10%. Basically, you get margin expansion. You become more profitable. Okay. So you could have the share price, say, of your company can stay exactly the same, right? But if your cost basis falls by 10%, you basically get 10% hits the bottom line, right? So now you are more profitable. You're actually now a cheaper company, say in a year's time, than you were before, even if your stock price stays exactly the same thing. And that's what is going to be happening. To the point, the deal that we've been looking at on the ground for in terms of venture capital, which is this oil and gas deposit in Vaca Muerta. And what we're doing there is, and this is through Mavericks, it's not through CapEx and Insider, but it highlights the point. We're investing into accommodation that's being provided to the oil and gas workers. There's a massive shortage of accommodation. That particular oil and gas deposit is only operating at 17% of known reserves capacity. And imagine now you start stripping away all of the garbage that has caused that to be the case, right? Because if it's profitable, then companies will just come in and extract it like they would anywhere else. The reason that it's been operating and is operating at only 17% is because of all the government red tape, because of the socialists that made it so difficult to do business there. And that's being stripped away. So now you're just getting this flood of additional extraction of resources, which just hits the bottom line. So these companies can and are becoming more profitable. So, it's like we've said before, right? You could buy, we had it with coal companies, buy some company at $1. If their revenues climb by 30%, stock goes from $1 to $1.10 in a year's time. Is it a worse company? No, it's much better. Even though it's gone up from $1 to $1.10, it's actually cheaper now than it was when you bought it for $1. Because his revenue is expanded by 30%. So we're going to see that sort of thing, and that can feed on itself. That's almost certain, in my opinion. The amount of, it's hard to imagine how bad the restrictions have been in the country, and stripping them away and just unleashing capitalism, I think has the potential to really drive huge margin expansion and increased revenue and profitability, which then will, of course, be translated into higher share prices as investors look at that and go, wow, I'm being rewarded. These companies are making even more money. Why wouldn't I put more capital in? Again, I think that these are very early days in terms of this cycle that looks to be playing out.
Let's talk about what to do from here. So if you're an insider member or Glenorchy client, you're probably already exposed to Argentina. I think Brad has generously listed some other stock ideas for you to go and have a look at if you wanted to check them out. We won't go into details of them, but you can have a look as ideas. They're not recommendations, but go have a look at them. They're all on the New York Stock Exchange. And as Chris mentioned, we're also looking at private opportunities in the country, and we've got one through the Mavericks project, and it's called El Silencioso. Chris, do you want to give like a really quick overview of the...
Basically, this is a massive shale and oil gas deposit. It's been massively restricted by Peronist government. Existing infrastructure is inadequate. There is about 35 to 40,000 workers that are working on this project. A vast majority of them are traveling 2.5 hours every day in, and then another 2.5 hours out to the fields because there's no accommodation. Co-investing with a trusted party that we have on the ground there, developing housing units for the workers, and we will be packaging them up, leasing them out, so there'll be a dividend income that comes off of the back of that, and our intention is to hold that and into a rising market, probably to some of the existing oil and gas companies who will be looking to put their workers into accommodation, and that's basically the deal. So people say it's a real estate deal. It's not really real estate. It's synthetic to the oil and gas. It's a bit like selling the picks and shovels to the gold. Massive shortage of supply. Demand is enormous. We'll be, by the looks of it, 100% booked out as soon as they are completed. And basically that's it. The numbers are very, very attractive. The team that we're working with are very well credentialed. Yeah, that's it. But if you want more information and you are into having some hard assets, private equity, then go to admin@Mavericks Project, send them an email. I'll give you more details. But yeah, so it's, I mean, the main point I want to make here is that Argentina has a lot of opportunity. Look, we would not be putting and wouldn't have put together a whole team to go and on the ground in Argentina to look at deals like this if we didn't believe in what we were doing. And we're doing it, frankly, because we're doing it for us. I mean, I want to put my capital like we do into Glenorchy and into Insider, into these deals. Whether that's right or wrong, we will find out. But certainly things are lining up and seem to be making a lot of sense to us. So that's what that particular deal is. And
I just want to highlight that the oil field, the shale oil and gas field, is the size of Belgium. And when you realize that workers need to get in and out of here, and there's nothing there, it's easy to see how necessary the investment into infrastructure around this oil and gas production is. I mean, it's pretty incredible stuff. Now, this is a private opportunity, so usually with these things, they're limited to accredited investors. The minimum investment, as I understand it, is $25,000 US. So bear that in mind before you go emailing the Mavericks project saying you want to invest. That's something to keep in mind. And the other thing is deadlines, the end of September for expressions of interest, and paperwork and your money needs to be invested by the end of October. I think we've got a chart here. The last chart we have, Brad, this is for people who perhaps don't want to invest in a private opportunity and think, how can I want to get involved? What are some other ways I can? And you've got to...
Yes. Yeah, thanks, Lucas. So this is like a one-stop shop trade, I guess, to gain exposure to it. It's YPF. It's to the US, it's to Argentina what Exxon is to the US. It has gone up a lot. We've bought it earlier on, but it's still very, very cheap. And this thing here can double just in a drop of a hat. It'll go up a lot more than that, especially when this field is opened up. So
yeah, they're the largest shareholder in that Vaca Muerta. There's a bunch. There's Shell. There's Exxon Mobil. There's a bunch, but
Chevron, I think, as well.
Chevron's in there. Yeah. Again, it's a significant field, and it's only producing, like I said, 17%. So there's the ability to expand this is.
All right. Awesome. Well, thanks so much, guys. I hope that gives people a better idea on Argentina. If you're new and you're looking at Argentina, or you didn't even know that opportunities existed there, I hope this was valuable. Thanks very much for your time, guys. And yeah, let's do this more often. Maybe next month we'll do a video on another topic.